There's some huge lessons, as Donald Trump would say, in his own tax and wealth plan. I'm not talking about his policies, what he's gonna do as president, but I'm talking about his own way of building wealth and paying almost zero in taxes. Everyone remembers his tax returns, along with a bunch of other wealthy people, got released a few years ago. And one of the number one lessons we learned of Donald Trump is in 11 out of the last 18 years, he paid zero federal income tax. This is despite having over 400 million of income from the Apprentice alone. But how was he able to do that? How was he able to pay so little tax and in 11 out of 18 years pay zero tax while making hundreds of millions of dollars? Today's video, I'm gonna break that down, and it's a strategy everyone can use on their tax return. You just gotta know how it works, and there might be a few less zeros behind it for you, but I'm gonna break it down in today's video. I'm Matt Sorensen, let's build wealth. All right, there's a couple things most people know about Donald Trump. One is his show, The Apprentice, and his endorsements and licensing deals that he made over 400 million of income on over an 18-year period. The other thing people know about Donald Trump is he has a massive real estate empire, from Mar-a-Lago to Trump Tower to golf courses, resorts, other office properties across the US. And those two things are the secret to Donald Trump's success in building wealth, but also paying minimal or no tax. Now, as Trump is out buying real estate, what he's doing is creating income-producing properties that appreciate in value over time, which affects his net worth and what's made him a billionaire. But he does not pay tax on that income from the real estate. And in fact, he gets to take a loss on that real estate, which he takes and offsets his income from The Apprentice and his endorsements. There's a special procedure he uses to do that that you can use too. Now, what Trump's doing on his tax return, he's taking depreciation expense on the real estate. You can do this with a single family rental, a commercial office building, a golf course resort, whatever it is. You can depreciate the value of the building, which creates a loss on your tax return. Let's say you bought a single family rental for $275,000. Well, the IRS says you depreciate the value of that, $275,000, over 27 and a half years, which creates a $10,000 loss each year that's gonna hit your tax return. Now, if it's commercial property, you take it over 39 years, but basically you take the full value of the property, which can include the cash you invested plus all the debt, and you take the building value, you don't take the land value, and you get to depreciate that. Now, one unique trick that Trump uses, and a lot of sophisticated real estate investors use, is something called a cost segregation, which allows you to accelerate the depreciation. Because there's a lot of things in real estate, in a rental property or a multifamily property, commercial, single, doesn't matter, where they say, hey, those cabinets aren't gonna last 27 and a half years. That flooring is not gonna last 39 years. It's gonna last 5 years or 10 years. And so you get to accelerate certain depreciation costs, which creates more losses on the tax return, which enables you to pay less taxes. Because what do I do with the loss? I use it to offset other income. Now, when you're buying hundreds of millions of billions of real estate, these losses become super valuable. And for Trump, he's taking these losses and using a special election called the Real Estate Professional Designation to move those losses from his real estate over against his regular ordinary income, the 400 million he earns from The Apprentice and all the other endorsements and licensing deals he has. Now, in order to do that, to take your real estate losses and offset them against your ordinary income, your W-2 or your business income, you must be a real estate professional. That has to be your full-time occupation, which for Trump it was. That's where he spent the most of his career, was in the real estate world. Later, he got on The Apprentice and did his endorsements and TV shows. But he could substantiate, this is my full-time occupation. You spend the requisite amount of hours, 750 or more, and you materially participate. If you do those things, you get to take these losses from your rental real estate and offset them against your ordinary income. Now, a lot of people can't qualify as a real estate professional. We'll have physicians or other high-income clients that we work with, business owners, and they're like, Matt, I'm not in the real estate business, but I have real estate holdings. How can I take those losses on the real estate to offset my ordinary income? Well, if you have a spouse that qualifies as real estate professional, maybe your spouse manages the property, that's what he or she does as a full-time job, and you have enough rental properties, you could justify that, because if one spouse qualifies, you both qualify. Now those real estate losses can come and offset your ordinary income. Now, there's a couple other things that Trump was doing, but that was the number one strategy that created the most losses and reduction of income on his tax return that led him to paying zero tax in 11 out of 18 years. And in 2016 and 2017, which are some of the last years that were disclosed, he paid $750 in federal income tax. But keep in mind, what does Trump still have? He still owns the real estate. It's still appreciating in value. He still owns that, and it is still building and creating wealth for him. Meanwhile, he's earning income from TV shows, licensing deals, endorsements, and he gets to keep all of the income. He is not sending a check to the federal federal government for their share. Now, I know some people don't love this strategy and you may not like Trump. I don't care, doesn't matter. I'm just telling you, this is a tax strategy you can use to keep more money in your pocket. Now, for more strategies on saving taxes, building wealth, protecting your assets, please subscribe to my channel. I'm Matt Sorensen, and I'll see you next time.